The first thing when I was going through your recent research you posted, I think, is your call for the Bovespa in 2024. So you posted that you think it's going to 155,000. Right now it's,
Yes.
125 to 130,000. So that's, I don't know, a 20+% return in 2024. So can you walk me through your thesis for the bull case for the Bovespa?
Yes, it's a somewhat a bull case. I've been seeing reading some reports from other guys, not the reports, but actually some new pieces of news quoting the target of other analysts or strategists. I think our number are a little bit higher than the others, but not much. My view is that earnings in Brazil will be good in 2024, particularly because the economy is working well, despite all the interest rate hikes in Brazil that we saw starting from the beginning. So our target is a little bit over the target of other strategies I have been seeing recently, but not much. I believe that the bull case here is that, in our view, earnings are growing because the economy is growing. As I said, the economy will grow probably close to 3% this year and another 1% next year, maybe more. And also earnings are growing because interest rates are going down. There is a lot of debt in the Brazilian companies currently. And not only in Brazil, everywhere. So, but interest rates are going down and going down fast. So this will create a good increase in earnings because the interest expense will be lower. What we are not so confident is commodity prices. Days we think the risks are more on the downside because of the slowdown in the global economy. But at this point, earnings in this group are a little bit not safe in the sense that there is no room there is no downside, but we will end the year with earnings compressed because partially oil prices are very low, food prices are low, sugar prices are decreasing. So all in all, I think that the downside from commodity earnings is not that big. And what's more important here is that historically in Brazil, every time interest rates go down, valuations go up. And this didn't happen this year so far. I believe that there are several reasons for this. One of them is because most of investors are still averse because of the political scenario is not so good, because interest rates are still very high, so on and so forth. But what I can see is that historically this happened, valuations goes up when interest rates go down. I think next year will be the same. And the starting point is very good to see that there is a lot of room for valuations to improve, partially in this group, as I said, the more domestic-oriented stocks. So this explains our target, a little bit of earnings growth and a lot of faith in Brazilian equities. As I said, this always happens when interest rates go down. And interest rates are going down not only in Brazil. Now we are very confident that interest rates are going down in the United States. The only risk to this target, in my view, is that maybe we have sharper deceleration in the global economy, a recession, let's say globally. That could be a risk to our thesis. This is the main risk to our thesis. We are very confident in interest rates going down, very confident in earnings going up in Brazil next year, but not so confident that the global economy will go through a soft landing or a more hard landing. So this is the risk.